Why do we see stock prices always go up before earnings? Yeah, it doesn't always happen. It's happening more so now because we're in a bull market, and a bull market means the market is going up. A bear market means it's going down. And the way to remember that, this is kind of silly, but if you remember the opening scene from The Remnant with Leonardo DiCaprio with the bear that was destroying him, bear bad. Bull market, you run with the bulls in Spain. Bull market, good. So when you're in a bull market, what happens is stocks tend to go up much, much more ahead of earnings. Because people are expecting earnings are going to be great because interest rates are basically zero right now. And so companies are doing exceptionally well. The opposite happens when you're in a brutal bear market. Sometimes stocks go down into earnings. And what a lot of people do is they look at options before earnings to see what the market is expecting in terms of future volatility after the company reports. And I'll be teaching about that in my upcoming course, which is being added to the MBA degree program, a much longer version of it very, very soon, meaning this month of November. But people look at options and they can tell what volatility is expected in the future. And the most important option symbol that you can ever look at, and what I'm about to show you, and I'm not a promotional guy, but what I'm about to show you will guarantee you make money. Okay, here we go. And if I had lawyers working for me, they would slap me in the face right there. But the most important options thing you can ever look at, it's very simple, is let's go together to Yahoo Finance. And I love Yahoo Finance because it's free. Don't ever pay for anything online, please. Okay, except my courses. But you get a refund if you don't like it. Okay, so we're going to type here VIX. Okay, that's little chapeau, accent circonflexe, VIX. And the VIX is a volatility index that was put on the Chicago Board of Exchange, which is where options are traded, one of the options markets. It was put there in 1990. And what the VIX does is the VIX measures what the market is expecting for volatility in the next 30 days on the S&P 500. And so if I go here to full screen and we look at a chart of the VIX going back to 1990, let me do max here, okay? And every chart tells a story, and I'll tell you the story of the VIX here. This will be fun. All right, so the VIX was launched in around 1990, okay? And when the VIX goes up a lot, it means there's maximum fear. And this is something I teach about in my options course, because when markets are volatile or stocks are volatile, it means there's a lot of fear out there. Okay, so let me run through the story here. So when you see a high number here, it means the market is crashing, and no matter what you buy stocks, it's going to feel like the world is ending. I don't care. You have to buy stocks. And I'll show you this in more detail. So let me scroll over here. So in 1990, when it was launched, we saw a bit of a spike here. Volatility went up. Okay, and the mark to buy stocks is when the VIX is 80. We're far from there right now. So I'm not a net buyer. But right here, the volatility spiked around December of 1990 because that was Gulf War I. There was a little bit of fear. Right, and then what happened was it spiked again here in 98 when we had the Asian financial crisis. Asian markets were in free fall. Then we saw another spike here, 9/11, for obvious reasons. And then here, this is leading up to when the statue of Saddam fell, which marked the bottom of the market. And then over here in 2008, we were within 24 hours of bank machines not working. And we reached a level of almost 80. And of course, everybody was selling then. And when the VIX spikes to like 80, which is when you buy no matter what, when the VIX spikes, it's really going to feel like the world is ending. And you're going to think to yourself, Chris is crazy for thinking about buying now. But you have to be that way because you got to be a contrarian. If you buy the same stocks everybody is buying right now, then there's not that many incremental new investors that push the stock higher. So you always want to be greedy when others are fearful, and fearful when others are greedy, as Warren Buffett said. And Warren Buffett also said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. So we saw a spike right here. Okay, this here was 2008. Then we saw another spike, and this doesn't do it justice because it doesn't show you intraday. But intraday, the VIX here in March of 2020, intraday it went above 80. Okay, and that was the telltale signal to back up the truck, meaning buy a lot of shares, no matter what. And very unemotional people did that and made a fortune, including Elon Musk. He actually filed a Form 4, which is an SEC document showing that he bought a ton of insider shares, right? And right here, he backed up the truck on Tesla. And a little side note on Tesla, 50% of all options that are trading right now over the past couple of days have been in Tesla. It's an unbelievable story. I'll talk about that in much more detail in my upcoming complete options course. If you're watching a replay of this, it's probably out by now.